Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, global markets reporter at Nasdaq. With the U.S. national election just days away, the focus is turning to tax policy and what that may look like if Joe Biden is elected president or a blue wave takes place. And at the center of that debate is taxing the rich. Joining me to discuss is Jeffrey Weiner, chairman and CEO of Marcum. Jeffrey, it's great to see you again. Welcome back to Trade Talks.
Thanks for having me, Jill. Good seeing you.
All right, let's get some background here. How many states do not have personal income tax, and how do they afford social services?
Well, that's a good question. There are seven states that don't have a personal income tax at all, and there are another 2 states that only tax investment income. They don't tax wages. So depending on your situation, for the average person, there's conceivably 9 states you can be in and not pay income tax.
And we know that taxes fund municipal works and so forth. So how do they afford stuff like that? How does that work?
That's a very good question. I've been trying to figure that out for years. There are sales taxes. For example, Florida, the real estate taxes are very high. There are some other type of intangible taxes that some states have. It's interesting to see. You'll see in a lot of cases the higher tax states, although you might not feel it, do give their taxpayers a lot more for their dollar, whether it be better public school systems, better parks and recreation. All the money doesn't get spent well, but generally the higher tax states give their residents more for the money than the lower tax states.
So why is tax the rich gaining so much traction? I mean, I understand it's good for political theater, but it just seems like this election cycle in particular is really, they're coming down hard on this.
Yeah, well, it is part political theater, and the average person. I wrote a column a couple of weeks ago where I showed someone earning $5 million was basically paying almost half their income in taxes. And one of the responses I got to that column was, well, I'd be happy to earn $5 million and net 2.5. It's all well and good if you don't make that kind of money, but the people who earn that kind of money don't feel so good paying 50% or more of their income in taxes. So the average person, it's very abstract. If you're the average couple where you're making $100,000 or $125,000 a year and you're solidly middle class, when you start listening to people who make $2 million, $10 million, it just seems so abstract that the fact that people making that kind of money would be unhappy paying more in tax while they just live a different lifestyle.
And that's a great point that you bring up, because the natural question is, oh, I'd love to have that kind of problem, but let's peel back the layers a bit here. Wealthy families employ people to keep their homes, cars, landscaping, childcare going. They pay a lot of money into the private school system. They frequent local school business. If you move to those 7 states without income tax, that's only going to stress the economy in the states they are fleeing. I mean, you have to look at both sides of the argument here.
No, that's true. And you just said it. I call it the trickle-down economic effect. Wealthy people employ a lot of people. They have very complicated lives. So whether it's cars or boats or planes or nannies or drivers or contractors, they're always remodeling houses. They're buying houses. They're spending money on clothing and grooming, and the trickle-down effect to the economy. People who make a lot of money don't necessarily save it all. They don't live like people who are middle class. They live like people who make a lot of money. So the trickle-down economic effect is unbelievable. So if those people en masse decide to leave a high-tax state like New York or California and go to either Florida or Nevada or Texas, and there's not only is there a lower tax base in the high tax states, but all the people they employ directly or indirectly suffer in the process.
Right. And so, well, the obvious question is, what's a more practical solution? Where do we find the middle ground?
I think the middle ground is that there should be fair taxes. They should be progressive, meaning the more you make, the more you can spend. And last night in the debate, they were talking about what minimum wage should be. And certainly people earning minimum wage shouldn't. They have hard enough time putting food on the table, let alone paying taxes. So there is a point where the more you earn, the more you should pay in taxes. But there is a point when you're getting to 50% or more people who make that kind of money have to work half a year just to pay their taxes. Now, there are other people who are working all year and can't afford to put food on the table. That doesn't make taxing the rich right. But there becomes a point where if you can live in New York or you can live in Florida and there's a 10% differential in tax, well, you could take that $500,000 you're saving on a $5 million income, and if you donated it to charity, you'd be better off. So, tax the rich works up to a certain point. Also, rich people tend to reinvest their after-tax dollars, whether it's in a business, whether it's in stocks, whether in bonds. So if they have money to invest, that also helps the economy.
Yeah, it's such an interesting philosophical debate in addition to a financial one, Jeffrey. It's great to see you as always. Thanks for joining us on Trade Talks.
Good seeing you, Jill. Take care.
And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.